All right, we're live. It is Monday night. We had a big down day in the S&P, overshot where I figured we'd go. Did have a bit of a buy tail, and now we're rallying as we speak. This is exactly the setup that I look for. Um, we had an all-time high. We sell off almost 5% here in a essentially monotonic. And by monotonic, what I mean is the price is just really moving in one direction. There aren't any significant rallies in here. There's this and this, but that's relative, to other moves. That's not much. So I would call this a monotonic fall. We have the 50-hour moving average dropping below the 200, and now we've got a retest. Okay, so this, particularly if it breaks down from here, that's the establishment of a bear wave on this time frame. Okay, that would be my definition of that. Again, the zoom out, we closed under the 50-day moving average. That tends to be a bearish signal. We have this coil going on. This is the second time in 20 days that we've made a new all-time high and then tested the 50-day moving average. There's not a lot of time between these two. And last time I was playing that this would coil along the 50 and then drop. It instead coiled along the 50 and then skyrocketed. So this time, will it be different? I think either way, we're going to see some play with the 50-day moving average. I don't think we go straight down. And so I'm not in a rush to sell. Normally, I would be taking this opportunity to sell this touch, but there's a couple of things that are lined up that I don't like about this. Number one is, and you might be able to see this just by kind of looking at me. I'm not 100% on top of my game, right? Trading is an inner game ahead of everything else. And I slept well, I feel great, but I just don't have that, the mojo, right? I didn't trade well yesterday. I had that, I didn't update this. I'll update this, but I had that Disney PayPal call strategy. I wound up ditching that. I had 1-day options that I tried to parlay into this Disney PayPal. It just really, it kind of sucked. It was a sucky day, and I think that I just let that affect me. And I even thought about keeping the Disney PayPal calls at the end just because it wasn't very much money at that point. But I realized the benefit of just being clean outweighed the potential positive expectation on those trades. And I did feel those had a positive expectation. Obviously, we're up, something like 30 plus points in the after hours. But basically, I really feel like I just mucked that trade up and I wanted a clean slate. So we've talked about the S&P current positioning. It's gone down monotonically. Now we're getting this bounce. It's a good entry. I would not discourage somebody who wanted to enter the market here, short, right? This is a great place to short. But here's the reasons I don't feel right about it. Number one, again, I just don't feel like my mojo is good. So if I'm going to make a mistake, and this is critical, I'd rather make a mistake and not take a trade than make a mistake and take a trade. Sometimes when your mojo gets messed up, everything that you decide is wrong. Okay. So if you decide not to take a trade, you should have taken it. If you decide to take a trade, you shouldn't have taken it. Right now, my mojo is messed up, but this again has to do with risk tolerance with entries versus exits. Okay. I'm going to chase an exit a lot more than I'm going to chase an entry. Why? Because I'm intolerant of risk. I want things to line up perfectly if I'm going to take a risk. Okay. So if I'm going to make them, if I don't feel like my energy is right, if I feel like my mojo is no good, I'm going to err on the side of not taking a trade, even if 8 times out of 10 I should have. Okay. We can talk about the philosophy behind that because there's some interesting reasons for why that is. It can be a great trade and you still lose money. Okay. That's the long and the short of it is that it can be a great trade. Like you can look back at it the next day if you didn't take it and be like, oh man, I should have taken that. Okay, but if you did take it, you'd mess it up. Okay, that's why, and that's I've just had enough experience to know that that's the case. So, what are some other things that are making me nervous about this? Well, number one, we just showed this the 50-day moving average is just north of where we're at, and we should see some interplay with that before we see a big down move. Do we have to? No, we don't. Do we usually? Yes, we usually do. There's usually some sort of like either it moves along this or it retests it at least, right? You're usually going to see some sort of interplay with the 50-day moving average before you see a bigger move down. I'm still targeting 4,400 by the end of the year. That means we've got tomorrow, Tuesday, Wednesday, Thursday, then next week, Monday, Tuesday, Wednesday, Thursday. We got 8 days, okay? So that means if we come up, down, up the next 3, then we've got 5 days to fall 250 points. Easy, honestly. Like with the magnitude in thin markets, that really isn't an issue. So, I mean, are we going to go up, down, up? I don't know. Probably not. Right? You can't predict these things. But the point is, I don't feel like putting the stake in the ground here and dying on this hill in terms of shorting, even if it's the right call. Because I think we're going to test 4606, and because there's all of these other moving hour convergences. The 5200 on the 2-hour chart is going to converge at this 4628 roughly, okay? And on the 4-hour chart, we've got convergence around 4650. It's a little different depending on which chart you use, but the point is that there's these magnets, 4606, 4630, 4645, let's call it. All 3 of those are magnets above the market, okay? Can we see just a straight monotonic move up to like 4640? I doubt it, okay? Now, would I be willing to short at 4645? Yes, absolutely, absolutely. In fact, I'll put an order in there, but I think the chance that we get there is without, like by tomorrow morning, I think is very low. It's basically nothing. So, but I'll put an order in anyway, just in case, something strange happens. No, I don't think I will. I need to get my mojo back. And I need to get a good night's sleep before making any decisions. So I'm just going to stick with that. I'm just going to be on the sidelines. I do think this is a good entry, though, to be short. Vol is cheap, okay, given the magnitude of the sell-off. We had a 200-point sell-off back here that wasn't nearly as monotonic, and vol spiked way more, right? The vol spike was from like 18 and change up to 35. This time it was 18 to 27. Okay, so roughly half the move in the VIX with the same fall in the S&P. Essentially the same fall, and it took way longer, right? So vol's cheap. We're back down to 23. That's cheap compared to, remember when we were at 4,500 and talking about shorting at 4,500 and VIX was at 35. I don't know if you've seen that video. Go back to 12.3 where I say, no, I'm not shorting it, even though I've been talking all week about shorting if it breaks 4,500. But at that moment, with the vol as expensive as it was not the right thing to do. And as you know, there was a face-ripping rally out of that low. This is not that situation. Vol is cheap. People are not exposed to risk. Markets are thin. So it's a good time to be short. It's a good time to buy puts. But I'm going to make that call tomorrow after some good sleep. Okay, second thing, very briefly. This is a chart on precious metal miners versus precious metal bullion. And what I'd like to point out is just that there is a upward slope in the last couple months there on this in this ratio. Some of that's the fact that gold has outperformed silver, and this particular index that I create is a little bit more heavily weighted towards silver. So that's part of it. But miners are showing strength, and that is consistent with what you see in the bottom of precious metal prices. Okay, mining stocks and miners lead out, just like you'd see that with oil stocks leading out at the bottom of oil price market. Okay, last thing is I want to review my rules. I made these rules a couple of weeks ago, and I want to review them. Practically speaking, I want to take only trades that I feel very compelled to take. Okay. And I don't want to be holding positions overnight often because, again, I want to get good sleep. That's part of taking care of myself. So what that means is not more than a few times in 2 weeks. The only time 2 nights in a row is if the trade is, quote, what I call playing with house money, i.e. the original premium has already been sold, so no net loss on the trade is possible. Most nights, I need to go to bed flat and wake up recharged. That's what's happening tonight. Okay, so I'm honoring that first rule. I could have stayed in that PayPal Disney trade. I decided I was going to value my sleep more, and I'm happy about that. On average, shooting for 3 trades in 2 weeks is the money zone, 1 to 2 trades a week. Number 3, I need to be going all out with my analysis, but not have that lead me to trading from default just because I did a bunch of analysis. So yeah, I'm doing the analysis. I'm looking at the crude S&P ratio. I'm keeping up with my natural gas spreadsheet and the secret sauce that I have there, doing the PM ratios analysis. There's nothing compelling right now, but I'm doing the analysis. Every day there is absolutely an amazing opportunity every day, but to see it, I have to be at a very high level of energy and vibration. Okay, so was there an amazing opportunity today? Absolutely. Did I catch it? Absolutely not. I did not. And lastly, stand guard at my mind. Always keep positive energy and vibration and excavate negative energy through practices whenever necessary. Did I have some negative energy today around trading? I don't think I did. Some days you just lose, and that's okay. But let me just think about that a little bit more carefully. Did I have any? Well, so the Disney PayPal trade. Okay, so doing a little bit of a what's it called when you do a post-op analysis. I had this idea, which was already a little bit like off of my beaten path, which was, to try to essentially hedge my bearishness in stocks with this call strategy in 2 beaten down names. Now, I still think that's a good trade, but it is off my beaten path. Okay. So not my strength, probably should have just left it alone. Secondly, I tried this like stupid kind of like hedging thing last night where I was like, okay, well, I can't get into PayPal and Disney options now because the markets are closed. So I'm gonna buy some calls and parlay that into the Disney and switch it over basically to the Disney and PayPal calls. That was my intention. That didn't go well. I just lost that never got back to my strike, even though I was kind of right that the market was going to bounce. I got in too early and it didn't bounce enough by the close of that day. So I basically was in. I was playing on the away field, and then I decided to play with my second string quarterback. Right, I was compounding my mistakes. So yeah, did that create negative energy? I guess it did. I guess it did, or it definitely like took me out of the positive vibe because I had to process like, okay, well, that was an error. And so that's so yeah, so I'll do some work tonight on that and get that negative energy out. There wasn't anything though that was like creating fear or anything that was like negative in that sense. So on some small scale, I think it's just a recognition of making a mistake. But other than that, I think not so much. So, all right, this was a longer video. I can't, if you made it through to this point, I congratulate you. um, I think I've been calling these markets really, really well. If you've been watching the videos over the past 5 or 6 trading sessions, I've been calling the markets amazingly well. I mean, with the exception of last night, we're putting on that call hedge early, but just about everything else has gone pretty much exactly as I've described it. And we're now closing out the 11 p.m. Central hour above the 50-hour moving average. So the idea of not, buying puts on a touch of that 50-hour moving average appears valid at this point too. So we'll see. Definitely could see some chop here, dropping back down in the night session. But I'm content to wait until a little bit more bullish overextension to the upside before trying to get short. All right. Thanks for watching again. If you're watching, cheers.